My name is Mike Sullivan. I'm a former IRS agent and teaching instructor with Internal Revenue Service. I worked at IRS over a decade. I've worked, I don't know, maybe 10,000 cases or so. Been doing this a long time. I'm a national expert in IRS resolution matters. Well, when I was at IRS, I actually taught the offer and compromise program. I'd accept them, I'd deny them when new agents were qualified enough to work offers. I told them things they need to look for, things they need to do. They were put in front of my desk really for approval and criticism. So today I'm going to talk to you about how do you get the lowest settlement with Internal Revenue Service. First of all, welcome to my YouTube channel. I kind of peel the curtain back, let you know what IRS is thinking on cases and what to do. So whatever I tell you is pretty much going to be the gospel of what's going on. So, as a former agent, I've looked at so many offers and compromise. There's a lot of garbage offers and compromise. There's a lot of good offers and compromise. So let me tell you how to get the lowest offers. Okay. First of all, you have to know the formula of acceptance. That is the big thing. You must know the formula. I'm going to tell you the formula right now. Once I tell you the formula, you need to make sure it's documented. And then I want you to write a cover letter on top of your offer. By the way, for your do-it-yourselfers, if you have a small case, do it yourself, you have nothing to lose. If you have a large case, don't even bother touching your offer. The offer and compromise is a lot more complicated than people think. It's not about filling forms. It's understanding how the IRS agent is going to look at that offer. So basically, when I get an offer on my desk, is it believable? Are the last 3 years consistent with everything that's going on now? Is the taxpayer current? Or have you made estimate payments? Is the packaging all together? So once I understand that the packaging is together, the documentation is there, you're current for the last 6 months, you filed all your tax returns, now I'm looking at the offer, and now I want to let you know how to get the lowest offer. IRS looks at two things for your offer and compromise: after it's believable, after the papers are there, and yes, after you've met the criteria. IRS is going to want to look at your assets, and they want a value of your assets. That's what you put on the form. They want a value of your assets. The key to making the lowest offer is to put the lowest possible value of all your assets. IRS asks you for the value of your home. But is that the value of your home a wholesale value or a retail value? I'll give you a perfect example. Person comes in here. I was able to get their offer down $30,000. They were selling their home, and homes in the area sold for X amount of dollars. But their home down here in South Florida needed a new roof. That roof was $50,000, $60,000. So on the offer, I went ahead and explained that the value of their home is not the normal value, because here's a work order or repair to put on a new roof of I think it was $60,000. We were able to drop that offer by that amount of money. Same thing with cars. If you have a car, what value are you going to put down? Most car people put down, well, the actual value, but a lot of times you can put a wholesale value down depending on the type of the car. So you want to get, number one, the lowest possible value for your assets to put on that form. That's number one. That is huge, is understanding how to drop the values of your assets. That's big. You can sometimes drop your offer up to 20, 30, sometimes I've seen them up to 50%. That's what you can do. The second part of the equation is IRS is going to look at your income, and they're going to allow certain necessary living expenses. If you do not know this formula and what IRS is doing, you have no business of filling an offer and compromise out and setting in by yourself. So let me explain what I mean. IRS is looking at your assets. I explain the asset side. IRS is going to look at your income to your expense ratio. So did you know that IRS has a national standard that they use for housing and utilities, for food and clothing, for automobile expenses, and operational costs for your vehicle? That means IRS has limited what you can take. You're going to put down on your offer what you spend. IRS is going to say, no, we're taking that off. This is the only thing we're going to allow. IRS's job is to pick your offer apart so much that you have money left over at the end of the month. Why is that so critical? Because IRS takes what you have left over at the end of the month and they multiply it by the life of the statute. So if you have 5 years left on the statute, that's a 60 multiplier. IRS is going to take whatever you have left over and multiply it by 60 if you have 5 years left on your statute. They don't tell you that, but that's what they do, and that's why most offers get rejected. So number one, you must know the asset thing and formula and what you can do, and then you have to know the national standards as it applies to your case. So when you go through that, pull up the national standard for housing and utilities, food and clothing, operation cost, and ownership cost. Once you understand that, you will be able to drive your offer down so you understand that IRS is only going to make X amount of dollars. And if your income is greater than that, you're going to pay IRS a lot more money. So the idea is to have your income lower if it's possible, but just to meet the national standards that IRS requires. That's how you get in the lowest offer and compromise. Anyway, I'm trying to pull the curtain back to show you what IRS does. I really need subscriptions. If for some reason YouTube likes subscriptions, it looks like you're really important. I really need you to subscribe if you like the content. By the way, I love comments. I answer all questions that you leave. There's not been a question I haven't answered. If you want me to make a YouTube out of something, I'll make a YouTube for you if you think if I really do feel that's important. So anyway, a like's always nice. I'm an expert in offers and compromise. By the way, all your tax returns have to be filed. IRS is going to reject it. Second, you have to be current in the year that you're in for at least 6 months. If IRS looks at your offer, they're going to pull up your account history and say you're not up to date. IRS will reject that offer and compromise. So remember, IRS is looking at your assets and IRS is looking at your income to expense ratio. So know that, and you will get the lowest offer you can settle for IRS. If you don't know the formula, hire someone. A person that you hire, like me or someone else, is going to be able to get you the lowest offer and compromise possible.